And then another tip here would be considering laddering non-qualified annuities for better tax control. So laddering, we talked about in a previous episode. There are some advantages of that. One of those would be, how you take distributions and which annuities you take distributions from. You can create a tax optimized approach with the laddered structure. And last but not least, talk to a professional before naming a trust as beneficiary. Sometimes it can trigger unintended taxes.
Yeah, just to hit on a few examples that you had mentioned here. So taking the income before 59 and a half, you mentioned the 72T rule. Separate occasion, I had a CPA on. We just found that, this individual is planning to retire at 55, and said, "Hey, I love the idea of giving myself an income, and based on the 72T rule, follow it accordingly." I said, "Well, yeah, let's get a CPA on, make sure this is in your best interest." And we found that it was just too restrictive. Really handcuffed her, limited her to her options, and we didn't like that approach. So we had a pivot. We took a different path. So just understanding what comes with these, and like you said, talking to a CPA, finding out where it's most beneficial.